last topic should be pretty quick. I think it might be the most fun one we do today too. But our fourth one here. So Ben Carlson, I'm a big fan of. I follow him on Twitter. I recommend anybody else that you follow him on Twitter. Read his blog, A Wealth of Common Sense. Read his book, A Wealth of Common Sense. He recently gave, I think it's kind of an interesting analysis of housing prices, basically saying that maybe housing isn't as expensive as we think. He looked at it adjusted for inflation, thinking about, combining that with low interest rates, thinking about the actual price to pay, looking at it as a portion of people's disposable income. All of those things say maybe it's not as expensive as we think. He also pointed out that in a lot of other developed countries, housing prices have risen at a much, much faster rate than they have in the US. So I think that's an interesting point. I don't want to argue that too much because I think housing prices are crazy ridiculous. I'm embarrassed how much I was able to sell my price for here. I was disgusted how much I had to pay to buy the new house that we're going to be buying. Instead of doing that, let's just talk about something our members will enjoy. What's a stock you really like that's tied to housing, Lou? You think could be a big winner?
So Redfin is always my answer here, but that's always my answer. So I'll go to different. I mean, Redfin, I really believe the revolution comes from within. Yeah. And so I kind of like their method of going about it, where they're kind of working within the traditional brokerage industry. And that total addressable market is just, salivating. Yeah. But that's boring. Why don't we talk about a housing stock that really doesn't benefit so much from a housing boom, but I think is a great investment, NVR. The sober guy at the party, the driver at the party, they don't do anything like home builders do. They don't leverage the way home builders do. They don't buy up land just so they can show pretty maps the way others do. They just plug along, generate amazing returns, buy back their stock, rinse, repeat. Plenty of room for expansion since it's an East Coast portfolio. They came into a boom and bust industry where they went bust, mind you, and learned from it. And they found a way to make it predictable, boring, and steady. And it's not the greatest stock in a boom time necessarily, but when inevitably it gets treated like a home builder when this cycle ends and it gets punished, look at it then, because it's a heck of a company.
Yeah, they're going to win through that. They have a pretty good little mortgage business too. They originate a lot of loans. They don't hold them, but they make a lot of money originating those loans. And I think that's really, really good there too. Parkev, what about you?
So, certainly house prices are going up on a nominal basis, at least if you just look at it that way. And one stock that I think can do really well for investors is Home Depot. Management often says that accelerating home prices is the major contributor in what folks are willing to spend on their homes for improvement. So revenue exploded during the pandemic onset, but it's expected to slow down clearly, but that's not the reason to own the stock. What attracts me again is the healthy and expanding profit margins. From 2012 to 2021, Home Depot expanded its operating profit margin from 9.5% to 13.8%. That's while increasing revenue at a compound annual rate of 6.9%. And if you want to compare that with its main competitor, Lowe's, their profit margin was 10.8%. So 300 basis points lower in 2021. And over the last decade, Lowe's only averaged 8.5%. So clearly Home Depot is the superior performer and they've been able to sustain that advantage over time. It's trading at a relatively fair 23 times price to earnings ratio, which is in the middle of its historical range. So it's not expensive at these levels either.
Yeah, I'm gonna share a quick chart here that just kind of illustrates some of those numbers you were talking about. And I think Lowe's is a pretty good business. But I think this really just kind of emphasizes, Parkev, what you're talking about in terms of the economic performance. So again, this is a 10-year rolling period, consistently has had the superior operating margins while growing those margins. And then you look at the return that this company gets. They know where to put their money. They know where to invest capital to get the best returns. They're just very, very, very good at it. I'm going to talk about another home builder here, Lou, and I'm going to talk about a boring home builder that largely does the things that you don't see NVR doing. It does take on leverage, but the company, like a lot of the other companies in the industry, has done more and more using options, land options to acquire, to build out its portfolio. But it does buy a lot of land. It does buy a lot of land too. But at the end of the day, I've done it again. I've completely lost my chart. Let's see if I can find it. I may have closed it. It's very possible that I just completely closed it out. Did I? Yeah, I just closed it out. So here's the key with Meritage Homes. What I like about this is a longtime stock advisor pick. This is a company that probably 5 or 6 years ago started pivoting to entry-level housing, the area that home builders were basically not building from 2009 to pretty much 2017, right? There was just massive underbuild there. And now it makes up more than 80% of their construction. Done a wonderful job under Steve Hilton, the founder, who's now his stepped down as CEO, retired as CEO, staying on as executive chairman, is pivoting to this model and focusing on it. And it's really paying off. The company's margins have steadily increased over the past 5 years. And now it gets mid 20% margins, some of the better margins in the industry, gets great returns, trades for single digit price earnings. I think it trades for 7 or 8 times earnings, which for context, now, I mean, it might seem like crazy cheap compared to the market. Because of their business model, it's always going to trade at a discount to the broader market, but usually around 12 times earnings is a reasonable valuation. Trades for like 8 times earnings, trades for less than 6 times forward earnings estimates. It's crazy cheap for a business that's this good. And let me give you one more data point here that's huge to me. It's huge. We could take every home builder in America, we could clone them one time and double that our entire home building capacity for 3 full years. And we would finally catch up with the needed inventory to meet demand. We're more than 3 years behind. It's gigantic. You know who that's good for, guys? Meritage Homes. That's really good for a great operator in this industry.